right, my dudes. Let's get some people in here. Let's see how things are going. Let's make sure the microphone's working. Everything should be good. Everything looks good here. What is going on? Hopefully you guys can hear me. Looks like the levels are pretty good here. Don't see any other issues there. Let's throw a little shout out to Twitter, let you guys know we're live. We are live on YouTube. What a day, my dudes. It'd only be appropriate to tag Elon and Vitalik in this wonderful thing. I think you guys hopefully can hear me up loud and clear. Just watching this, that was a crazy dip there. There wasn't a huge amount of volume though. I mean, relatively speaking. I mean, there was some massive volume on this sell-off right here, but you got a few things that are Bitcoin down 12.5%. Let's get some folks in here. Make sure you guys can see and hear me, which you guys should be able to. Yep, you guys hear me. Mike, volume is low. All right, let me see here if I can fix that. Then we will get into it here. Volume low. Okay. Make sure that this voice for the microphone was all the way up. I mean, you can always talk a little louder too, and that should help. I mean, but I am using a little, I'm using the RTX voice on this laptop, and sometimes it, let's see here. If that changed it or not. It might be trying to buffer out a little too much here, but. So you guys say it sounds fine. All right. So we'll go with it. So yeah, it's a dumpster fire. So let's get into this. We're about 4 minutes in. I can start the video's timestamps from right now. For folks that don't understand what's going on right now, because two events have occurred today that really started pushing the price down. So Vitalik Buterin did kind of, I wouldn't call it the unthinkable, but he donated. So I saw a post from Hudson Jamison today that kind of started it. So let's do this. Let's do Hudson Jamison today put out a post. this is kind of what kicked it off. So when we look at the time here, about 1:55 today, my time, which is Central Time, 2:55 Eastern Time today, Vitalik went out and took a lot of these, the Elon token, the Shiba Inu token that we were talking about yesterday, and several others that were the meme. And for folks that weren't tracking, Vitalik was gifted like half of the Shiba Inu tokens. It was part of their burn mechanism. Is it wasn't really a burn; they were just sending it to Vitalik. So Vitalik turned around and essentially pulled the rug out and sold like $55 million. I'm going to find the transactions here in a minute. $55 million of this token to get this 13,000 ETH that he ended up giving it to GiveWell, and then sent another 10% of the outstanding tokens that he had from the Sheeb token plus 500 other ETH, and just donated to all these different sites. It was the India COVID Relief Fund and a few of these others. Well, what happens is when you have that much liquidity, even though these tokens say that there's like ninth on the list and it's worth, billions of dollars, the reality works in cryptocurrency is it's a price times its supply. That doesn't mean that there's liquid money out there. So there's only so much locked up in liquidity pools. So the real look that you're looking at is in the liquidity pool. So if we go over here to like Etherscan's set up here, and I don't know why this is not fully sized. Let's readjust this here, so you guys can see my screen here. Let's go down, pull this up. There we go. So if we go up here to the ERC20 token up the top here, you can kind of start to search, and you see all these things that are down right now. Well, what you can do is you can come in here and type like Sheeb, and then scroll this down a little bit, and you can click on like this one, and you can get kind of the drill down of what's going on with this. And what I like to see is the DEX trades. We can't see the CEX trades, which is the centralized exchanges. You can see the Bob to Alice transaction, like when you send coins to an exchange, and if that exchange address is known, you can actually follow those transactions on the blockchain. You can see it on Ethereum's network when somebody's sending like this token to, like, let's say, since some of the different exchanges started accepting this, you could see this going to like Bittrex or something, right? Or Binance. But you don't know what Binance does with those. You don't know if it's like, if it's locking it up into a liquidity pool. You don't really know what's going on unless they notify the address that they're doing that stuff with. But with this DEX trade button here, if you click this, you can actually see if you're using something like MetaMask and you're swapping between the DEXs. So if that's Uniswap, if it's PancakeSwap, that kind of stuff, you can actually see the activity out here on this view. A lot of people don't know about this view. So you can see like 44 seconds ago, there was a buy of this much ETH. So 11 million of the Sheeb token, right? $200 in value, transaction value. You can see all this buy and sell activity. And what I like to do is I come in here and I'll look at I'll hit view all. And Etherscan doesn't give you all the history. It only gives you like 4,000 records of history at a time. Okay. So you can let it spin right here and you'll see that. And now we'll have, page 100 of 4,000, right? Well, I like scrolling down here. That's giving us 25 records. We can come down here. We can set it to 100. And now it'll let you see it'll let you see the last 100 records, right? So you can go back in time a little bit and see, it's actually processing this right now. That's what this little box up here is. You can go back there and you can see, okay, what happened, 6 minutes ago, 10 minutes ago, and we can actually kind of jump back. We can go back to the last page and see how far let's just go back. So if we hit last page, right now it's going to process that. We're going to see how far the last page of transactions are. Maybe we'll be able to find the one transaction that Vitalik did. So this was 3 days ago. So this definitely was within this, and you'll see a lot of this buy sell activity, right? And you can pull and parse this into like an Excel sheet, and you can do an if statement to see how many buys, how many sells were there, and you can kind of get a rough order of magnitude, what most people call a ROM, to figure out how much, how much is coming in to a particular token through the dexes, right? So this allows you to show kind of ebb and flow of liquidity in and out of a token. Now, there's people that can take these and, you could take this, you could take the CSV file, you could import that and parse that data in, and you can start to kind of build your own analysis to see, what's going on with, these DEX flows, in a manual way. You could do this obviously through API calls if you had, an API account with, Etherscan, but allows you to kind of see what's going on here. So let's go. Let me go to the page count. Probably not. We'll go back to the first page. To see is like when he initially announced that, my first thought was they're going to liquidate this. I actually posted on this post. The second this was posted, I posted within seconds. I think there was only a couple likes on Hudson's post, and I said, huh, you don't want to say anything bad because it's a good, the act of kindness that's happening when it comes to just if you're taking your own money, meaning like the tokens that Vitalik had, like with the pre-sell, if he was taking that and he was donating his money to these causes, like awesome. But this was kind of like this weird. You had to know what's going to happen when you take you take all the liquidity out of these meme tokens. Like, do you not understand? Obviously he understands what's going to happen. He sold $55 million. He pulled the bag out from everybody. And what it comes down to is it's not like it's an inherited trust. Like Vitalik didn't ask for these tokens to be sent to his address, but it's kind of one of those things that comes with the position of power or comes with the position of somebody that you know. Like for me, if somebody sent me all these tokens, I would understand that, like, okay, that's a lot of tokens. Thank you for that. But like, I'm not going to sell your bag out from under you. Like there's no, like, he has more than enough that if he wanted to donate, could donate. But he knows that there's not $1 billion worth of stuff. And now the media is going to pick it up that there was $1 billion. But in reality, all of those tokens that were for like the Shiba token was like, $100 million. So it was about 10% of that, right? Is the real liquidity that was under it, which is like all the liquidity. It's like $115 million when you look at it. And, just rug pulled anybody and everybody that were in it. Now, there's all kinds of like, the people like took some small investment on it and it grew to some crazy amount and everybody was like playing the whole HODL army and all that. But like, this was like a sketch move, dude. Like this was kind of like almost like a meme move is like the meme token, like to like good intentions, but like these tokens were just sent over to him and like he just rug pulled it all. So you have that activity, right? Like good intention, but like questionable like execution to do that. Um, and it shows all the transactions. It shows each of his transactions in here that what he did and transferring. Let's see here. Like this one showed. Now this wasn't how much transferred. This was just a relative amount, right, of the token value at the time versus how many outstanding tokens, which was the 49 trillion here, and then it showed 371 million. Now obviously it wasn't 371 million. I don't know how much liquidity was underneath that. There was a different post that was showing how much liquidity. I could find it. But like, you guys saying the sound, you guys hear nothing? I will try to talk louder. It's showing my levels are pretty good, but I'll talk a little louder. Like I do like to see exactly how much he pulled over there. It was about 55 million, I believe, SHIB token worth of value. And I want to say it was probably 12 to 13 million on those other tokens worth of true value, but it's essentially all of the liquidity, right, from these tokens here. So you had that for the first thing. So for the people that were just getting here, we're talking through Vitalik's move to donate a lot of these tokens that were like airdropped to him. And he took those and donated it to a whole bunch of different causes that are legitimate and good causes, but like totally pulled out the rug from everybody that were in those tokens. And mind you, I don't have any of these tokens. I didn't buy any of these, so I'm not talking on behalf of that community in any way. I imagine there's going to be some people that will want to either come on the channel or somebody wants to like vent, but I know that they were totally hit up with this. Um, this is like a I don't know, man. If you're trying to win over people to the next network, this isn't the kind of way to do it, I would say. But it is what it is. So you had this happen, and then you had the second thing happen, which I think is a knee jerk reaction where Elon Musk put this out today at 5:06. So this happened at 1:55 p.m. This happened at 5:06. So about 4 hours later, Tesla puts out this statement where it's that they're going to suspend vehicle purchases using Bitcoin. They're concerned about rapidly increasing use of fossil fuels for Bitcoin mining and transaction, especially coal, which has the worst emissions of any fuel. Cryptocurrency is a good idea on many levels. We believe that the promising future, but cannot come at a greater cost to the environment. Tesla will not be selling any Bitcoin, and we will intend to use it for transactions as soon as mining transitions to a more sustainable energy. We're looking at other cryptocurrencies that use less than 1% of Bitcoin's energy, versus a transaction. So obviously, the first question is going to be like, what's the measuring stick when it comes to more sustainable energy? Bitcoin is not going to move from proof of work. I don't think that will ever happen. The consensus is not there. There's too much backing the proof of work. And there's already a race. There's a natural incentive to go to renewables. There's a natural incentive to not take things out of grounds and burn it and go through all this activity to create energy to then mine for Bitcoins. If you can have a quick flash to bang from like air or solar, um, you know, items that would be, what is it? You have like there's Norway. I know that there's folks extracted power from waves and gravity, having the gravity with the tidal waves coming in and out, and having like a windmill kind of setup that's set up in the water. You have different incentives to move to this kind of renewable energy. And I've seen different figures around. I've seen as high as 75% of Bitcoin is being mined on renewables. I know in specific areas that's higher than that, but there are areas in China and a few other, I would say more rural countries that have, that are still using coal because that's their infrastructure, and it was cheap coal fire, plants that had exorbitant energy, lots of extra coal, and obviously they're going to be there. And it's until you can bring those incentives, or you have some kind of structure in a government that puts some regulation on this type of any kind of high energy use stuff, and a higher taxation on emissions, that you're going to have a natural transition. That being said, this is a kind of I think this was them succumbing to some pressure where people are like, hey, you have Tesla cars, but yet you're promoting something that's still burned with coal, right? It's like, what gives here by their investment that they made? I, I mean, there's some definite signal to noise here, but at the end of the day, they're not selling their stack. They know they're not going to sell their stack because they would take a big hit on it, and that would be another cash flow thing of showing that, yeah, that wasn't a good idea for them to buy high and sell low. But I think them coming out and giving some measurements and clarifying that this isn't that they're expecting Bitcoin to ever move from proof of work, because Bitcoin is not going to move from proof of work. It's just not the way it works. There isn't a better system than proof of work out there yet. You have when you look at the trilemma of issues, when you look at decentralization, speed to transactions, and scalability, you have those kind of three trilemma things. Vitalik brings us up a lot with being concessionary to the trilemma of trading some centralization of process to increase transaction speed and move to proof of stake. There are this is still a known thing. Like, this is every proof of stake system gives up a little bit of decentralization to move to this, concept that you have a better solution with proof of stake. And it is what it is. So the natural behavior on proof of work is to move where your energy sources are from renewable sources, so you can have clean energy into that. So Bitcoin's not moving from that. Other cryptocurrencies that are GPU mined, You know, you have Ethereum that is going to push for proof of stake. It looks like this year. I still think they're gonna naturally slip into next year, um, unless the community understands that the uh, that they're not going to be able to withdraw their stakes. Now, I see some people going, no, 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 China, the POS is way better. POS from an energy, from if the argument is purely from like renewable energy reduction and of overhead, it is more efficient. There's no question there. Proof of stake is for sure that you're running effectively a node. You're not having a huge math competition where you're going to have a scale. You know, it's a fight to see who can answer the problems the fastest, and you have a natural, arms race, as it were, of hardware where you're using a lot more energy. So, from an energy efficiency standpoint, proof of stake is better. The problem with proof of stake, and it has been forever, is that you're going to have proof of stake. You have a natural centralization issue where you're going to move to a place where, to protect against civil attacks, you're going to have some kind of mechanism there in the game theory to where nothing at stake issues, people attacking the proof of stake consensus with having, what you don't one third that's bad actors. It's that 1/3 to 2/3 situation that you have in proof of stake is part of the issue. So, like, Ethereum's answering that by having a situation where if you have a known bad actor that's giving you false information, or they're not online long enough, you'll end up having some sort of where they start taking away part of your crypto, right? So that slashing mechanism that proof of stake Ethereum's using is just one that I think it's a concession. Some people that have to give up some of that. Like, with proof of work, I don't have to share my private key in such a way that when I have it locked in a node, somebody can't take any of my coins, right, on my behavior, right? And that there's a that disincentive. uh, I don't personally, I haven't seen it to where I'm comfortable with it yet to say that that's worth the risk for me just yet. I want to see a large system that has a lot of transactions that have the incentives in the right way and see if that ends up being better. That's saying that I won't ever move to proof of stake with Ethereum. I just want to see it functioning before it's like I don't want to try it before I have to buy it. I want to see actually how that system works and look at those attack vectors up there. It scares me, understanding the architecture as it sits right now, that there's mechanisms in place to slash my coins. And that, uh, given how much scrutiny that something like Bitcoin's proof of work had, and looking that there were inflation bugs, there was issues with that were caught. Is there issues with, has Ethereum had enough rigor in it on its proof of stake to say that somebody doesn't exploit that in a way to automatically slash somebody, right? Or cause some kind of effect that has a whole bunch of nodes get slashed or something like that? Because you're giving access, you have to submit access to where the network has enough control on a trigger to slash you. So there's still some questions I have with that. Until when that gets clarified, then proof of stake will be more, maybe more palatable for me. The other part with proof of stake that I have with at least Ethereum is that when it goes to move to proof of stake later this year, if that's what their intentions are, currently right now, there's no intention to allow you to withdraw. That's been shelved. So the minimum viable product right now is moving to a place to where they're going to just change consensus, but there's no way to unspin that your current beacon chain that you have your node in. And that also concerns me, because it means all the transaction volume that's being pushed into those transactions now being authenticated by the proof of stake nodes. You got the natural inflation that's going to decrease because of proof of stake. Then you have all the transaction that are going to occur even with 1550 as part of that proof of work consensus, or that proof of stake consensus, moving over to it. All those transaction amounts are just going to go into those staking nodes, and they're not going to be able to be extracted. Like, those nodes won't be able to, take those things out. There's an entire other architecture set up to where these staking pools are going to be in a place to where they're going to have an extra bag of coins. And if, let's say, you're hosting your node with them, you can technically just say, hey, I need my 32 coins back or my 34 coins because I earned 2 coins in interest, in my staking rewards. I need those coins now. I'm going to bequeath you essentially my node, and you're going to give me these loose coins that are not locked up. And you're going to do that for a fee. And it's creating this kind of margin pool that's going to be the crutch, I think, initially for Ethereum. And that's not really the way the system should be designed. I think they should come out to where you can unstake your coins, and that if it's going to take over that responsibility, it needs to be able to unstake. I think that's an important feature. But those two things hold me back from proof of stake. Don't get me wrong that I'm not against the concept of proof of stake. I'm just concerned where it puts it from a centralization standpoint. And those questions haven't been answered. And that's something I gotta research more and help go through some discussions with you guys. I would like to get Micah and some of the ETH staker folks on and have that conversation. As somebody that is a big proof of work proponent and moving to a proof of stake world, I want to like to have that conversation. But we'll have a whole other video on that, and I want to have that with actual people that are part of the ETH staker and all that, and have both sides of that for they can rebuttal some of those concerns, right? Because I think that's only fair to have that side rebuttal and say, hey, I understand where you're coming from, but here's the way we're going to answer that, and I think that would be a good thing. Bump the proof of work is blue collar. Proof of work allows anybody to participate. That's the difference. Like anybody can participate. Well, let's put it this way: anybody that could get a graphics card could participate. Sorry for the light. Is this? Am I like? I'm like glowing right now. I might have to turn on my overhead light. I got my light shining here. I'll look at some of your guys' stuff. Elon working with banks. No, I don't think that. I think Elon put this statement out there, and this could have been canned. Most of these kind of statements, by the way, guys, like something like this, that's going to be a post like this that he posted as like not him just typing on this. This was a prepared tweet, right? This was a prepared thing. It happened to drop today. And maybe the timing was perfect because Vitalik was trending, and it was like a 1-2 punch with Vitalik dumping the market on all the ETH meme coins. I mean, look at all the doggy coins today. That's a rough day, man. The TikTok influencers just got rizzy wrecked today. Man, that's a rough go today, man. On that. It's Vitalik's not even trending anymore. Elon's Bitcoin piece is trending. Let's see here. Hashtag Vitalik. Let's see if there's any deeper analysis that's been done on some of his transaction volume. Yeah, there is the billion. That's where they're getting the billion. Now that did not actually um that was what he was going to switch over, but $115 million is what I actually saw go through Uniswap, where he did the rug pull on the liquidity. There is another transaction, um, if we can find it. There was another transaction analysis done on this. I was going to do one tonight on this, but I got to go through the Ether scan here and pull the actual transaction. Let's look at, let's do a quick transaction review here of what's going on right now with it looks like there's still people buying this token. Yeah, I mean, 9 minutes ago, there's still people buying. Like, yeah, maybe these are bots and somebody forgot to turn off their bot. They call you the Jesus proof of work. You are overdoing it right now with the light. Yes, I think so, right? I think this light. Actually, I'm going to get over here and see if I can change it. Here. How about this? This better? You go. Sparkpool had a block that had 93 ETH. So that was a pretty large that would have been a pretty large. You know what block number it was? We can take a look at it if you have the block number. So if people always ask like how do I go out there and look what the current block reward is and how when do I do these analysis? So I'll walk you guys through it real quick. So right now you can see there's some 9 ETH rewards here. What I usually go down to is you just do a view all blocks, right? You scroll down here. This will give you the most up-to-date, accurate, current, and accurate. So this was 19 seconds ago. Let's scroll all the way down. Let's go all the way down here. Let's grab just to there. Copy that. Pull it in to Excel or Google Sheets. Paste it. Just double click that. Highlight column I. Do a Control F. Replace Ether with nothing. Replace all. It makes the 100 changes there. And then you can do an average. Open bracket. Hold that one. Page down, page up. Get to that last one and then hit enter. So the last 25 minutes, that's our average block reward right now, 7.69. So that's the block reward as of right now for Ethereum mining. And we can look in here, you could throw a filter on this part here, in the last 100 records, and you can see, what was the highest one. So you can see 9.41 was the highest. So that gives you a kind of a quick 25-minute search. That was about 25, 26 minutes ago. Dude, you can export to Excel. Yeah, I know there is an export to Excel. But sometimes that export to Excel on Etherscan is real slow. And that what I just did was pretty fast. The copy paste works just as fast. And then if you want to know what's going on with particular tokens, and if there's a buy trade activity going on with that, you can come in here and you can see, let's see here, something that's just getting sacked. Let's look here. Let's look at the change here. Oh my God, 99% change on that one. Uni. Some of these gotten wrecked today. I don't know what some of these are. You guys see any token in here that looks just worked? See if people are, we can look up the Sheeb. We were just on it. Sheeb Inu. Go to Dex Trades. View all. Let that process. Do you think Bitcoin will stay above 46? I think there's enough folks out there that's been waiting for a pullback like this that they're buyers. They're buyers in the 40s. There are orders that have been filled through limit orders, and I'm seeing people with a lot of hope that it will go below go below 30K. I don't think that's happening. I could see it going as low as 42, but there is just a lot of buy orders out there. Elon saying that they're not gonna, that they're holding their coins, but they want a better world, isn't saying that, they think Bitcoin's the worst thing since sliced bread, right? There's that's not what's happening. So this pullback, I think, is a natural pullback people have been waiting for, but it isn't going to sack the market. Ethereum rug pulling people might pull some confidence out of, out of a lot of the token holders that are making all these meme coins. People I think will learn a hard lesson here. The TikTok investors will learn a hard lesson here. Maybe. Sometimes that money's just too cheddar that they're going to keep doing it. But you know, Ethereum Classic, I know pulled way back down to like 70 and it's already back up. I saw Ravencoin pull down to like 12 cents. It's back up to 13. So yeah, I saw it as low as 12.2. Masario is showing 13.3. I don't know who they're actually tracking through. All right, this loaded. We have the top 25. Let's do the last 100 transactions with Sheeb and see what the selling and buying is. Bigger data sets, definitely the export's the way to go. Yes, exporting, you can export for bigger data sets. You can give it a range. You can actually do it down here. So on this particular one, you can come down here. The problem with that is here, we'll open this in another window. So if I open this up in a window and watch this. So if I go here and I go today, let's just do today's. Or, you know, I was doing one day. I wanted 1 day of transaction history. And let's go to 12. So we're looking at 1 day of transaction history, right? Let's try to download that CSV file. There it goes. Maybe it's sitting there thinking. So let's see if it actually pulls it. It's sitting there spinning. What I was having problems today is Etherscan was so overwhelmed that even a 1 day transaction history wasn't coming through. So I see what you guys are saying on the data exports, but you know, it's just it's overloading it. So again, on this particular one, I'm going to come in here, just pull these, copy, we'll pull this back up. We'll open a new sheet. And what we're doing here is we want to pull it pulled in the icon for Uniswap. That's hilarious. We're going to delete that row there. We're going to do a little. All right, we don't need that. Oh, Control Z. Let's go this way with this. All these are over. Let's go. Undone, undo. Let's do this. Let's call this this was a buy activity. So this was buy, sell. Okay, equals if that equals a buy, then show me this. Somebody's trying to call me. Mr. BBT Todd Prang trying to call me. He doesn't know I'm live with 700 people. If that value is true, give me that. If that value is false, give me a 0. Right? And go ahead and just pull this all the way down. And we don't care about that. That's going to give me all those figures. Same thing here. Copy, paste. I need to tell this back to D. And this is going to be sell. And like you can make a model like this and then you can automate all this. Like I have models down on my main computer that are all automated like this. To where if my APIs are not pulling, I can actually let's see here. That I1 is wrong. I need to do get rid of this. Move because I need to see this. It's J, not I. Copy this, paste this. D and J. D, J. Wait a minute. That's sell. This is buy. Sell. Okay. I fixed it, my dudes. I think I fixed it. Or is it H? It's H. There we go. Now I fixed it, my dude. All right. So now we're going to add a little row up here. And see, now if I have this, if I was importing this, I could just paste in A through this, and it's going to give me these. So I can say sum this. And what we're doing is we're seeing, are people using the dexes to dump this stuff? And then we're going to do this. This is $366,000 in the last, what is this, 25 minutes or so? We'll have to look at the bottom there. And then I can do just copy this and paste this over here. And how many are selling? Oh, there's more people buying than selling on the dexes right now. In the last 6 minutes. This is 6 minutes worth of traffic, so not much. So you'd obviously want to do several pages of this. You'd want to see a trend over time. But more people are, for some reason, YOLOing into buying SHIB right now. There's more buys than sells. This is BitsBeTrippin. I got it, Joel. The funny thing is, most understood me. Says, there goes my attic. ASICs are more energy efficient, but ASICs are boat anchors after they're not usable. And guess what? Most of the BBT farm is Polaris cards from 2016. Check block 12422 12422 That was 15 days ago. What did I type in there? 123. Oops. 12422 Here we go. 1 hour and 20 minutes ago. 91. Look at that transaction fee. Yikes. It contained 128 transactions and 297 internal contract actions. Let's take a look at the contract actions. So wrapped ether, there was I wonder if this was a paid for mine. This might have been an MEV extract here. Self-destruct of that. 3 pages. Let's look and see here. We're looking at the contract actions. We're seeing at why somebody paid such a high fee. 52 ether, 54 ether. I didn't see any large contract actions. 4.2 ether, 55 ether, 55 ether. Sushi shop. All right, let's go back. And let's take a look at now the transactions. What got moved? And this is like the Bob to Alice stuff. There's 50 records. Let's do 100 records. There should be a couple pages with 128 transactions. A lot of just random contract actions. Looks like one failed here. Looks like somebody just greatly overpaid for a transaction. I don't see anything in here where they paid. This is like a backdoor pay. Spark pool. I mean, this was for tokens. Is sushi top 4 out for? Yeah, I didn't see anything too out of ordinary there. Elon Musk is switching to Ethereum. I don't think so. Not yet. I think this was a PR move for folks that were questioning why the Bitcoin transaction, the why make that Bitcoin transaction when it was, there's some farms that are using coal. Fun mining all this, but it shows how fragile the market is and naive to fall under events of today. Hey, you know what? We haven't had a market mover like this in a long time. I think it was a 1-2 punch, both for Ethereum and Bitcoin, at least a little bit back, because it is a kind of a crypto diva, as it were. Elon has turned into where he's really grabbed that culture, and people really gotten behind him on stuff. And I've always been a Elon fan when it comes to like some of the SpaceX activity. I like going and watching the launches. I think it's amazing they land rockets. Um, there is a little too much snap with the ebb and flow of his tweets to impact to the market, and I think that shows it right here. I would be interested to hear how much of this was immediately tied to, like, the flash to bang from investors just dumping that. I mean, this was bot driven. This was maybe exchange. It's a pretty interesting dump considering the amount of FUD that's came out recently. That would be, I would say, almost, where you have countries like you had India. I think it was India, right? It was India or Pakistan. One of them came out and said that they're banning cryptocurrencies. An entire country had no impact on the crypto market. And this tweet from Elon mixed with the bag pull that Vitalik did to all the meme coins, was a kind of a 1-2 hit to pull the market back, billions of dollars of, virtual liquidity and probably hundreds of millions of real dollars out of people's pockets. What was this? Divya. Hello, I had a question, please. Is Ethereum mining profitable right now? I just woke up and Bitcoin is down, so all of a sudden, yes, Bitcoin is down because of what's on the screen right now. Ethereum's yields are very high right now, so your yield is going to be high. Your US dollar value equivalent is going to be significantly down from earlier today when it was at about $4,300 with high yields. But you're still going to get a lot. Your Ethereum amount. So if you're mining right now and you've been mining all day, a pullback in the USD value really doesn't impact the yields that you're getting. You're still getting. I mean, we just did this just a minute ago for people that are mining Ethereum. Your current yields within the last 25 minutes or so are still well over uh, what they've been. So, I mean, we've been averaging around 2.8 to 3.1 Ethereum per block every 15 seconds. We're averaging over the last 2 days anywhere from 6.5 to 8 Ethereum. So it's more than 2 times. It's 2.3 times the normal yield. So the amount of Ethereum that you're actually earning if you're mining Ethereum is a lot higher than normal right now. Elon wants cheaper Satoshis. I mean, like, dude, like he. Now, what would be really suspect is if he came out and announced, "Hey, sorry, we didn't mean to move the market, and we just bought more. We have more confidence than ever in Bitcoin, and we've topped off that $1.5 billion to another 500 million to an even 2 billion to bring some confidence back." after a nice little push and dip, that would be quite the choice move. That might get a visit from the SEC, but like, yeah, I mean, it's pretty apparent that his influence is pretty prevalent right now. Now, what'll really, I mean, this is kind of tongue in cheek with anybody that yeah, panic sellers. That's one thing. On the Bitcoin front, it's just a pullback. Are people actually selling heavy? There were some obviously sells and dumps in the market to cause this pullback, but like the things that happen with like Ethereum, like there's like Ethereum pulled back some, but some of those meme tokens that people have been buying got completely wrecked today. I'll take a few more questions, guys. If you guys have some more questions, I mean, I wanted to have this discussion. I wanted to kind of go through some of these transactions. I wanted to show you guys how I kind of go through and look at some of these charts and stats when it comes to when you see me putting any kind of value where the value extract is going on some of these ERC20 tokens and on the DEX side because we have all that telemetry we can look at um, and how you can do it yourself. It's always good to be able to kind of take a look real quick to see what's going on. You can create alerts and stuff like that if you built your own system on that. Panic mode, I'm selling. Well, some people are going to USDC, USDT, and just going into cat, equivalent into stablecoin US dollar, and just seeing if is it going to pull back. Are we having like, a double pullback here where it pulls back down to 47 and then drops again? Let's take a look real quick. A lot of these numbers haven't been really automatically refreshed. And I was looking at Ravencoin earlier. Let's look at the whole screener of all assets. So Bitcoin is setting at 49. Its lowest point today, what the 47 or 46? Let's see here. Yeah, so it went as low as 45 flat. So obviously there was a big look at that 24-hour spread. Oh, you guys can't see it. Hold on. So there's your 24-hour spread. It went as low as 45. So it obviously hit a buy wall at 45,000. So somebody had a big limit order there to absorb that 45. So 58,000 to 45 is a pretty strong swing. With tweets like Elon about generating way or about greener ways to mine, are you still dabbing a bit into hard drive mining? So I had a small Chia rig. It quickly got outclassed by just the sheer size that Chia went to. And when the pool kind of concept starts to come online with that, I might end up deploying some of those hard drives. I ended up getting about 30 terahash or 30 terabytes worth of space, but that quickly got dwarfed by just the sheer size of Chia. So, I didn't want to chase that that grind to start getting into like hundreds of terabytes um and start going after that. But once there's mining pools and stuff set up for that, I think it's an interesting thing for people that don't have options to get graphics cards. A lot of people have been like, why would you do this? Why wouldn't you do this? It's like, if you wanted to get in a hedge position with cryptocurrency mining, hard drives are available, and this gives you an option to be able to get into a cryptocurrency through a different series of mining. There's people that have asked me to do a thing on helium, and I had a helium person reach out trying to send me a miner. My problem with any kind of specialized devices, it's always been, guys, is that if there's not ready availability, I don't want to spend the time to talk to you guys about it because it's not fair market. It's really hard to get, and me getting a sample of that, it just serves you no purpose. So, there's other channels that are covering like helium and some of these other things. But like, if I can't go out there and get it, that's why I'm not talking a lot of GPUs right now either. Like, I was camping in November getting GPUs because that's what you had to do to get GPUs. And I covered a couple videos on 3090s and 3080s. But, I'm all about fair market participation. If you and when we have down times, and I was talking about cryptocurrency mining with you guys of how to mine and how to pick up cheap GPUs and that, it's because it was fair market, meaning anybody could watch this video on any part of this planet, go out, get some equipment, and participate. And for their effort, they would get compensated in a crypto. I think that is the most, you know, attractive piece when it comes to cryptocurrency mining to me. Is that there are no strings attached. You literally go out and get a piece of equipment and can participate. So hard drive mining is one of those things that you can do right now with the chai. It's just the problem is the force projection you would need to participate and have a chance at winning some is still pretty high. I mean, you would need to be really, really high in the amount of total space that you have that's plotted and set up right to do that. So that's why I haven't really covered it that much. Nothing is fair anymore. Well, so what I would say to that is if you already have hardware, you have fair market, right? There's new coins that come out. You can spec mine on those new coins. I've always talked to people about strategies out there. You mine what you have to from a profitability, depending on how large your farm is. You got to mine Ethereum. You got to mine some of the larger caps because that's what pays for the whole show. But always take 5%, 3%, which if you have 10 rigs, that's maybe one rig for a few hours, right? If you have two rigs and you divide that time of 100% mining as much as you can every day, all day, every day, then take 1 or 2 days out of a month and mine something speculative to see if that gives you your opportunity, right? There are a lot. I mean, I've talked about a whole bunch of different projects that are out there that are fair market launch coins that didn't have a lot of hash power on them. And you had Ubik out there, you had eGem, you had these different alternative forks of Ethereum that have done some kind of other change to it to try to get some, fair market participation there. The flash to bang might be not as fast as Chai going up to what it did, and then as precipitously it fell when Vitalik just pulled the rug out from everybody on it. But like at least you could mine it and nobody could steal your coins, and that it was fair market, so that there wasn't a huge bag dump on you. Um, there's some opportunity there. Scalpers control the GPU markets. I think anything that has high demand is always going to have somebody trying to front run that price up. I mean, it's just what it is. I mean, take a look at Facebook Marketplace. Look at with this pullback, people might be able to score some deals right now. I mean, there's a lot of people that are not in it with, I mean, beyond paper hands, man. Like that freak out and just dump their rigs, and you can't you might find a deal right now. I mean, if Ethereum pulls back and it gets down into the 3,000s and it drops even into the 2,000s, you're going to see some capitulation on mining for sure. 51 terabytes and 10 FPGAs hit ROI in 45 days. Woo. Congrats, my dude. 4 GB mining is great right now. So yeah, I mean, there's a lot of people don't like. I was doing an update to the mining spreadsheet, and if people that don't track that, I do that mining model update. There's a big mining model update that's coming out. Um, that mining model spreadsheet. One of the things I wanted to show is when you look at something like ETC, people weren't really tracking ETC. It flew up to $175. Anybody that had been mining it ended up being a really good play. Now it's like what, $80, $90, almost $100. When you start to trace the terahash that's on ETC versus its price, we're still well under, right, what the yields were. Like for Ethereum. Ethereum went all the way back last year down to $86, and it was 160 terahash at $86, guys. Like, and it had 2 per block, not 3. So perspective is an interesting thing, right? When you look at the yields on Ethereum Classic, you got a network. Let's look at the network hash rate. I'm using Ethereum Classic as an example. I've always used Ravencoin. Ravencoin, I believe, is a longer, better play. just because of the amount of yield you get for your hash power. But let's look at ETC. I think it's going to be spread between both of them, amongst other things like Conflux and a couple other ones whenever ETH goes to proof of stake. But Ethereum classic hash rate. Boys, I can't spell today for nothing. Yeah, let's look at here. We're looking at 26 terahash, okay? 26 terahash. And it peaked at about 34 terahash and was like 160 bucks, okay? Ethereum, when it was setting last year, $86 to $120, right? Ethereum hash rate. This is like, people don't track this, man, and I'm just, this is the realities. So Ethereum's hash rate, let's take a turn back in time, my dudes. Let's go back to January. December 25th, 140 terahash. When we go back and look at price, the price between these dates here, all the way back to, I think March was its lowest time, right? March got to like this time around there, 170 terahash. 2 coins per block. It was about 2.1 by then because there wasn't a huge amount. None of the DeFi stuff kicked off yet, so we weren't getting expansive blocks. 170 terahash, 2 coins per block, and people were still mining it. Okay? The yields were 1/5 of what you were getting on Ethereum. Ethereum Classic's price right now, setting at, let's go up here. It's pulled back down to 82 bucks, okay? $82 at 24 terahash. So when we look, now granted, the value proposition, I'm not going to make an explanation that the value proposition for Ethereum is a lot better than Ethereum Classic. I think that goes without question. I'm talking simple mathematics here. You are getting, right now on Ethereum Classic, almost 4x yield than you were back a year ago on Ethereum. Because Ethereum's Classic's hash rate is 24 terahash, not 170, and you get 3 coins per block. And it's the same block time. So that's perspective. And that's what the kind of stuff I look at. Same thing with like Ravencoin. Ravencoin's setting at like what, 6 terahash right now? 7 terahash? Let's look here. Ravencoin hash rate, 6 terahash, right? It hit a peak when Ravencoin hit about 27 cents back in March, 12 terahash. It's halved its total terahash, which means that same hash power you had here, you're getting double the yield here. Okay? The price came down by half. Makes sense, right? Yet the yields that you're getting, right, might be 140 coins a day. Well, 140 coins a day at 14 cents is about 27 bucks or something, or $20 or less, right? When you look at what your yields are comparable to like Ethereum. However, if Ravencoin goes through its halving next year and it goes from 5,000 coins per block to 2,500 coins per block, the hash rate that you have right now on Ravencoin, getting 140 coins per rig, and that goes to $1 in price, that was like you were making $140 a day, right? So that's the perspective. This is the stuff that I'm talking about when you talk about spec mining. Speculative mining is looking at the future state of coins. And this is the thing that I've always said to you guys. It's about the long game on a lot of this stuff. You are compensated for your securing of networks. Nothing more, nothing less. That's why I don't get all butthurt when Ethereum starts yelling at us about being like dirty miners or whatever. Like, dude, like we took a risk to buy hardware because we believed in a network. We're supporting said network for a token. That token we also keep and sometimes force deploy into other projects. We don't sell every token. I don't think anybody sells all of their tokens, right? Some people may sell it for another cryptocurrency, but I don't know of a lot of people at all. I don't know of anybody that I can think of right now that sells all of it just straight to USD cash, right? So that money is getting force deployed usually back into the system. It's buying other hardware, it's expanding operations, whatever. But it's all about how do you set your stack and how do you take a chance on certain networks, right? Because and then part of that value proposition of what you would take on a particular network is what they're doing. Are they innovating? Are they developing? Do they have a plan? What is the value proposition they're bringing to the table? This is what I was trying to get into yesterday's video. That was the quick video about the Shiba Inu coin and things. Who knew that was going to get wrecked the next day, right? But this is the fundamentals I'm talking about. These networks have pulled back on their hash rate, but they're not going anywhere. The fundamentals are all still the same here. Elon comes out and says, "Hey, we want a better sustainable future with energy uses on this stuff." That's that's a good goal, but I would argue that all that is already built in to the folks that are mining to aim for the most efficient process. So why it hasn't transitioned everything to renewables, it's on a path to transition to renewables. Because the market advantage, if you get set up to where you're getting most of your power from the sun and you're not having to have all this other overhead, eventually catches up to where that's the better play, especially if you're a high energy user, right? So the renewables are a natural progression for something like Bitcoin mining. Renewables are a natural progression for just society in general. Yeah, it's not there yet, and maybe this kind of thing pushes more that back end infrastructure to change, but it still doesn't change the fundamentals of the cryptocurrency network. It doesn't change the fundamentals of why we're all mining and upholding these networks and why it challenges the status quo. So that's what I would get, start to kind of leave you guys with is, don't be scared off on the fundamentals. Nothing changed with those fundamentals. People's opinion of a particular operations function may have, you know, they're reevaluating it, but it doesn't mean that they're coming out of it, right? So I'll take a couple more questions, guys, and then we'll wrap this one up. Hopefully, you guys. Let's see here. Zesty fanboy excited with $5 super chat. Thank you, sir, for that $5 super chat. When do you think this insane mining yield will end? Is it worth to add a couple more cards to my mining rig just before EIP 1559? I mean, I would not pay overpriced cards at all. We haven't put any more new cards. We haven't been forced to put any new cards. We're not paying higher rates for any of the new GPUs right now. Um, the the yields right now, there's a lot of activity going on. I think a lot of that was driven by these meme coins. Maybe it'll slow down and we'll get back into 2.5 to 3.1 coin per block. EIP 1559, if we were staying at 2.9 2.6 coins per block, it's not going to hit much. It's not going to burn much. Like this last few days, it would have burned quite a bit of coin. It would have probably burned about 1.5 to 2 coins potentially on every one of those blocks, right? So you would probably had an actual inflation. I have allergies, so that's why I keep messing with my nose. The We would have had there's probably some deflation in Ethereum over the last few days because the base fee would have made up 20-30% of some of these transactions. So you would have on like a 9 ETH transaction there, you might have had 1.5 to 2 ETH. So all the inflation, the 2 coins, would majority have been burned equivalent. And then, we would have had a total block size of maybe 4 coins versus 6 coins in that instance. So yields would have been down about 20%. And the narrative with 1559 is if you have a pullback or you have a high transaction fee situation going on, the people that are promoting heavily on burning the thing are going to have dashboards like this that are going to show how many coins they burn, and they're going to like, look how much we've extracted and burned out of the system, and it's going to promote more of the hype around it. At least that's the theory. um, my concerns are that it's priced in and then 1559 is going to sell the event. um, and then it pulls back more, which is just going to contract the hash rate some. Oh, what do you think about ETC moving to the SHA-3 algo soon? I don't think they're going to move to the SHA-3 algo, right? You guys see some data that says they're going to, I know that they were talking about SHA-3, but I think after their ETC hash, there's no reason for them to do that. Brandon James, how do you feel about NIMQ? Have you read the white paper? I feel like their approach is very unique and what transactions soon to be POS. I haven't looked into it too much. I think NIMQ got started getting mined by FPGAs, right? I think it went away from normal mining, right? On Vertcoin, what's up? At some point, could you do a video on crypto taxes? I actually had a crypto tax person reach out about trying to explain crypto taxes, and that, I think it would be an interesting episode. It would be like a fireside chat where you guys could talk to him. If that's something you guys would really like to do, I wouldn't mind having a facilitated thing. And of course, everybody knows that anytime I've interviewed people, I will let that person talk because that is something that I want to make sure we have a qualified person that's had to deal with it. Um, on a range of situations, not just the crypto tax situation we deal with, right? Because there's a lot of different states, there's different um, potential situations. Some people, borrow their core working cap, where like if you're mining, you're paying your your AGI, your income on your mine, and then the stuff you're holding, you may borrow against using something like BlockFi to use versus selling your coins and paying capital gains. There's a whole strategy to that kind of stuff, and I'd like to have somebody that deals with the various options on that to answer some of the crypto tax stuff. But a lot of that is just the accounting that you have to do from setting your cost basis when you're paid out and then seeing what you're making sure that you're doing your expenses right because you have a cost to mine, right? There's a real cost to that and you got to account for that. You account for depreciation's kind of messed up right now because everything's appreciated, right? So if you're depreciating your mining rigs, if you're treating it like a business, you're depreciating that asset, you're in an appreciation market where like your GP, you're not going to depreciate those cards to zero. They're going up in value. So you got a very interesting situation there from an accounting standpoint, especially if you ended up selling those assets later for a profit. SHA-3 Classic Coalition is the Telegram. So I mean, there might be an initiative that they were trying to get um, SHA-3 at one point, but I think that was more of a conglomerate of people that were trying to work the ASIC angle, right, on Ethereum Classic. I don't think now they would alienate the 24 terahash that's on their network. Um, it doesn't compute. They have more hash rate than they've ever had, and to do that now, I just don't see. I mean, there might be a coalition that's pushing for it, but I don't see. And they have everything to gain from all of the hash rate that could come from Ethereum. I just don't see how SHA-3 would play out well for Ethereum Classic now. Awesome. Yeah, it looked like you guys were into that. And I'll let them know. We'll find a good time. That might be part of the conversation too. There's a miner summit. We're doing the pre-roll for that because there's a code that you guys can save some if you're wanting to come out to the miner summit. Minersummit.com. It's a local kind of conference. I'm getting the details to the conference actually tomorrow to see the format. It's kind of like again fireside chats, Satoshi Roundtable style conference. So there's not like people getting up and speaking. It's going to be in the Ozarks, and it's around capital formation if you're trying to build larger mining farms, the power folks, which is around renewable energies and that sort of thing, facility management, all of that kind of stuff. So it's more targeted for larger operations. I'm really close to the Ozarks, so I'm going to go out there anyways. I think there's a few Bitcoin folks coming out there. Slush Pool's going to be out there. That's going to be an interesting conversation. I can't wait to have that one with Slush Pool if I can get them off to the side, because I mined with Slush Pool back in late 2010, 2011, right when they first came online. Um, and I actually, my very first Slush Pool account, a lot of people don't know this, my very first Slush Pool account, I just gave up on. Like I mined for a certain amount of time. I mined Bitcoin, and then I just like forgot about that first account. Mind you, this is like 2010, 2011 time frame. Slushpool sent me an email showing back in the beginning of 2012 that said, "Hey, your account's been inactive for a year." And I actually tweeted this out not too long ago. I said, you're a Bitcoin OG win. You get a deactivation email from Slushpool in 2012 that you haven't mined in your account in a year. And I totally missed it. So I do not know officially how much Bitcoin I bequeathed to Slushpool back in 2012 when I never responded to their email, because I don't think I ever withdrew it to an account or anything. I mean, this could be a lot of Bitcoin. Now, I'm not going to try to go after that Bitcoin or anything. I mean, it is what it is. Like I never responded to it, but I have the email, I have my username and all that, and I want to save that conversation, at least part of that conversation, for a live stream. I think it would be epic. Like if they're down for it, and I mean, I don't know if they can go and research it. I have the email. I'm gonna print it off. I'm gonna show it to them, and see what we can find. It would be really cool if they have. I would assume they have, because they were European based, and I mean they have GDPR, so I don't know if they got rid of it. But like I would like to see if they had any logs from that time. I would like to see how much Bitcoin did I donate to that back then. I mean, because it potentially could have been like, I mean, I had like 5 machines on this with like some of them 2 GPUs per card. I had to have at least hundreds of Bitcoin that I bequeathed to them. So I want to see like what was that actual account. I think that would be a awesome watch. Will the conference be live? I'm taking down my equipment, and we're gonna have a place to shoot from. I'm gonna have 3 cameras. I'm bringing a few people with me. BBT Todd's coming down. And I'm gonna have BBT Brett down there with me. So it'd be pretty interesting. Edward, a computer science student here, just had a shower thought as a joke. How possible it would be to create a proof of work coin using RAM, and it would depend on latency. I mean, that's effectively what part of the algorithm that F hash is doing. So what you're thinking there is what part of the Keka, if you go out and research Keka, the Keka. So the Keka routine that's within F hash. If you just look at it, there's quite a bit of design specifications, especially around proof of work, or around prog proof of work of what it takes with that routine when it's going through and kind of doing a number order sort list in memory. So part of the reason why F hash is very highly dependent on like graphics cards is because of the high speed memory bus interface that comes on graphics card. So in a way, it's not using system memory; it's using the RAM on a GPU. So you're not far off there. It's just it happens to use a GPU because that's the faster way to do the processing in it. But that's effectively what's going on. There it is. Serpent's got it. Keccak. Is Doge doomed? I don't think anything is going to ever kill Doge. I think people have a natural appreciation for it. Unlike the Shiba Inu and some of those other tokens, Doge has a long history. I think it'll ebb and flow. I think it'll continue to like have a soft place for people. No problem, Edward. Yikes, jamming. That sucks to hear, man, that you deleted your wallet. All right, my dudes, it's been an hour and 20 minutes. I always say that this is gonna be a short one. I'm gonna have to this is gonna be an interesting timestamp video. So I'm gonna go and get some timestamps for this one. Hopefully some of this has been informative. I'm gonna get back to regular scheduled stuff that I was gonna submit. I wanted just to have this conversation with you guys. Hopefully this was a good conversation. And I answered some of your guys' questions. And yeah, don't worry, the crypto is not on fire. This is a pretty nice dip. Um, this is why people are told to dollar cost average. This is a buying opportunity. New cryptoness, Elon and AOL. No, I don't. I think he'll get through. All right, my dudes. I will catch you guys on the next one. Peace. Don't freak out.